Good morning, and a happy Wednesday, everyone. Welcome to today's episode of Morning Wealth. Three things that we will talk about: Energy's Day in the Sun, Earnings Roundup, and Euros move higher. Energy shares climbed with the price of oil on Tuesday, pushing the Dow higher after a fiscal stimulus package from European Union boosted hopes of mitigating the pandemic's economic fallout. The blue chip index gained about 0.6%. The S&P 500 was up 0.2% and Nasdaq was down 0.8% a day after closing at a record. The energy sector powered gains in the S&P 500. From a sector perspective, we saw the sector up 6.2%. ExxonMobil was also higher 5.1%, and Chevron, on the back of the acquisition of Noble Energy, was up about 7.2%. The rally carried oil prices to their highest level since early March, when they plunged amid the pricing war that we saw between Saudi Arabia and Russia. US crude rose 2.8% to 41.96 a barrel, its highest close since March 5th. The gains came after European Union reached a historic pact overnight that signaled greater unification and spending across its members. The bloc agreed on terms for a 1.8 trillion spending plan. The package will center around the bloc's first ever issuance of common bonds that could help deepen the bloc's economic integration. The pan-continental Euro Stoxx 600 rose 0.3%, pairing earlier gains to its highest close since March. Dollar weakened across the board, with the Aussie up about 1.5% yesterday. Treasuries barely moved. The yields are hovering around 0.6%. That's been the case for the last couple of weeks. Gold continued its jump higher, and equity futures in Asia are pointing to a slightly lower opening. From an earnings perspective, lots to digest. Let's go through one by one. Shares of Coke were up about 2.3% after the company said the revenue fell 28% in the last quarter as lockdowns to stop the spread of the virus sunk sales of its beverages at restaurants and movie theaters and stadiums. But the company also said the worst was behind it and July was shaping up better. Lockheed Martin was up about 2.6% after the defense giant reported that its quarterly revenue and profit were above expectations and revised its full-year outlook higher. IBM also managed a better than expected second quarter profit as sales fell just 5.4%, and it got a big boost from cloud computing revenue, which was up about 30%. Shares climbed early in the session but closed down 0.3% after a late afternoon slump in tech shares dragged on the major indices. Texas Instruments forecasted a profit of 1.4 to 1.34 a share on a revenue of 3.6. That was better than what the consensus expectation was. Snap's daily active users lagged behind its own forecast, sending the shares plunging in late trading. And lastly, on Philip Morris, gained after providing a better than expected earnings forecast. Looking forward, Microsoft will likely top consensus for the fourth quarter with a revenue of $36.5 billion when it reports later today, though a decline in corporate IT spending could offset some of those gains. Tesla's goal of delivering 500,000 vehicles this year is a long shot, but the company may book an annual net profit thanks to a higher demand from new models, is what the street is expecting. On the FX side, European Union leaders finally reached a $2 trillion deal to rebuild their economy, sending the euro to a 6-month high above 1.15. The historic agreement appeases all parties with a nearly equal mix of loans and grants. It will go a long way in boosting growth for a region already in the midst of a recovery. Unlike the US and other countries and regions, Europe has managed to keep the virus cases low as they have reopened. The Eurozone economy has taken a turn for the better. Data is improving, and this stimulus package will provide a big cushion to the recovery. We've been speaking about Euro for the last couple of weeks actually, and this is certainly a positive development. The US dollar, on the other hand, traded lower against all of the major currencies. There was no US data that came out yesterday, but stocks rallied, but investors were less interested in buying dollars given the ongoing concerns about the US economic outlook. That's your update. Stay safe and healthy, everyone, and we'll speak soon.